there should be cross utilization of the VAT and the SEN VAT which used to be charged. We know that there used to be like for service, especially for services, we used to charge service tax. When it comes to goods, we used to charge VAT. There are a lot of confusion when we talk about the prior to GST structure. So here, after introduction of GST, it was like we are going to have only one tax, and you can easily exchange that, easily like use that. The ITC can be easily utilized. Along with that, there's a free flow of ITC. But whether this actually happened or not, so that is one thing we have to understand. So now, what exactly had happened, right? So everyone was very happy. Okay, now we are going to have the GST. There was a single return, one-click filing, automatic, and obviously the goods days are ahead of businesses. But now, if we just talk about, this is about GST. GST was launched, but they have kept certain conditions. When we are saying conditions, there is section 16, which talks about some conditions of even claiming ITC. And what exactly that conditions are? They clearly say, do you have an invoice copy? If you don't have a valid tax invoice, you can't claim ITC. Which is, I think, genuine also, that you should have a proper document with you for even claiming ITC. Then the second condition they kept is that whether you have even received the goods or services, because if you have not received, you can't claim ITC. Other important condition which they have kept was whether the supplier has paid the taxes to the government. This is something today also, if you ask us, we know that people still say, hey, how I'm going to even know whether supplier has paid taxes or not. I can know using GST or 3B that they have paid some taxes, but I don't know the taxes which they have paid are the taxes which was my purchases, or this could be something else also, because that person would have actually supplied to lot of customers, right? So this is still a question mark, like how we are going to even identify. And since this is a kind of cycle, when I'm saying cycle, which means if there is a supplier who is going to file a GSTR 1, right? So there is a supplier who filed GSTR 1. Let's say by 11 they are filing the GSTR 1. The payment they are anyhow going to make only by 20th. So if they're going to make the payment by 20th, so now me think about there's another person, me as a recipient, right? If I am a recipient, I am also going to file my GSTR 1 by 11. There is no problem till there. Now talking about claiming ITC, how I'm going to claim ITC? I'm going to claim ITC in my GSTR 3. That's how I'm going to claim it. Now I can file my GSTR 3B by 20th. Now simple thing. Obviously my supplier is also going to file their GSTR 3B by 20th. And I'm also going to file my GSTR 3B where I'm actually going to claim ITC by 20th. Should I wait for my supplier to first file their 3B and then only I can file my GSTR 3B? Obviously, I can't do that, because I don't have to only look into one supplier. I have to look into like hundreds of suppliers. I can't keep on waiting for them to file and then I should go ahead and file my GSTR 3B. And obviously, there would be a lot of persons who are dependent on me. I have also supplied to a lot of customer, and that customer may also say, okay, I will be filing only when you file, right? So this will become an endless process and no one will be able to even file GSTR 3B if we have to meet this condition. So here, whenever we are referring to this condition, this is more of, okay, you just look into your GSTR 2B, and if the ITC is available in GSTR 2B, you just go ahead and claim the ITC. Maybe in the next month, you see if that your supplier is compliant or not, whether they have made the payment or not. If they have not made the payment in the next month also, which means they have not filed their GSTR 3B, then there are high chances that the government may ask you to reverse the ITC. This we are going to actually understand in detail in our section 38, where they have actually made the changes in the budget, because this is some important point related to this. There are some changes which is actually reflected in section 38, right? Other than that, they clearly say that credit in electronic credit ledger not in the books of accounts. So we have to make sure that we are even claiming it. It's not like, okay, there was some ITC, I had received the goods, I have even purchased it, I have a proper tax invoice, my supplier has also filed, everything was properly done. But one mistake I have done, I have not filed my GSTR 3B. Or maybe that ITC amount I have not shown in my GSTR 3B within the time limit, because there is a time limit for that. I have not shown that. In that particular case, I can't claim ITC now. Simple example. whether I can go ahead and claim ITC for 1718, FY 1718 today. So let me ask you this question. Can I go ahead and claim the ITC which is related to 1718 today in my GSTR 3B, which is today is like 2nd March? Can I go ahead and claim that ITC? So I got the answer from Arpit. Arpit says no. Arindam says no. Chitra says no. Arpit says time barred. Chandesh says no. So everyone is correct here, which means we cannot claim ITC which was related to 1718 today because it's time barred, because the maximum time limit for claiming ITC is your next year September ka return period. That is what they have done. Obviously, there is a new proposal again in the budget in relation to this also, where they are saying this as the 30th November. So that's another change which they're going to make, which is now part of budget, but still it is not notified. So we have to wait for the notification. So now, which means we understood that merely the ITC reflecting in the books of account is not important. We should also go ahead and claim that ITC in GSTR 3B. So if we don't do that, we can't claim ITC, and we have to claim within the time limit which we have. Right. So this was there's nothing new. This is not like our rule, or we can say this is not a new section 38. This is our existing thing, which is already part of our section 16, which talks about the claiming of ITC. So here, if we just talk about this all, we actually mentioned all this thing. We have the invoice copy, we received the goods. Now after 4 years, because obviously there were a lot of hue and cry in the market, people were literally confused. Okay, I have tax invoice receiving was actually easy part. But again, for that also we should understand about the e-invoicing thing. So if my supplier, because we know that in October, right? So October 2019, when the government have come up with the e-invoicing concept. So when they come up with the e-invoicing concept, where what they have said that for every supplier to whom this e-invoicing is applicable, they have to get the IRN number and the QR code. What does that mean? What if they are not getting the IRN number? Again, if they are not getting the IRN number, there is another problem which is going to be created. If the IRN number or the QR code is not mentioned in an invoice which has been issued by the supplier to whom this e-invoicing was applicable, then that will not be considered as a valid invoice. Okay, then what? If that is not a valid invoice, then I as a recipient will not be eligible to claim ITC. Because for me to claim ITC, one important condition in our section 16 was the possession of a tax invoice, which is a possession of a valid tax invoice. So if you don't have a valid tax invoice, I can't claim ITC. So this was another change which happened after this e-invoicing was applicable. So for me, it was as a recipient, it is very important to understand that the supplier, he is actually getting an IRN number, which is invoice reference number, if e-invoicing is applicable to them. So till now, we all know that e-invoice is applicable if your turnover is more than 50 crore. That was the limit they had introduced. Now with the recent notification, which is again applicable from 1st April 2022, this limit has been reduced to 20 crore. So now if your supplier whose turnover is more than 20 crore, in that particular case, this e-invoicing will be applicable to them from 1st April 2022. So this is a recent change, which means now we also have to make sure that the limit is 20 crore, and I always have to make sure that my supplier, they're getting, or they actually are raising an IRN number while they are issuing the invoice to you. Because if they're not doing that, you will not be able to claim the ITC. Still, after a lot of complexities, after all of this, we finally cracked this ITC problem. We understood like when to claim ITC or when not to claim ITC. We know that, okay, I have to look into 2A or 2B, because again, there was another confusion between should I go ahead with 2A or should I go ahead with 2B for claiming ITC. Let me ask this question from you. Today, when I'm saying today, right? So today is 2nd March, right? We know there were a lot of confusion between 2A and 2B. We keep on talking about Rule 36.4, but then again, the another problem was about the validity of this Rule 36.4, because there is also Section 16, and we clearly say that rule cannot override section. Even there was Rule 36.4, people were clear about that this particular change was not in the section. So if this change is not in the section, how can I comply with the Rule 36.4? Then again, the government have actually made a change in section 16 itself from 1st January 2022. So now the change is in the act. And if there is a change in the act, we have to follow that. So that confusion is gone. But today, let me ask you one simple question. From January 2022, do I have to look into my 2A or I have to look into my 2B for claiming the ITC? So you can just reply on the chat box. I could see the answer from PK, who is saying 2B. Lucky says 2B. Ramesh says, I think there is a question from Ramesh who is asking, is e-invoicing applicable to a zero rated and exempt supply? So Ramesh, e-invoicing is applicable to zero rated, which is a exports or maybe supply to an SCG unit. So if you're supplying to an SSU unit or you are doing an export, then yes, e-invoicing is applicable provided you are actually exceeding that threshold limit. But if you talk about the exempt supplies, in that particular case, you raises a bill of supply. And this e-invoicing is not applicable for bill of supply. This is only applicable in case of the tax invoice. So tax invoice or corresponding credit debit notes, there only you are required to generate the invoicing. So which means for a bill of supply, which you have issued for the exempted supply, the invoicing will not be applicable. So I got the answer from everyone, and everyone says to be. So I could see Naveen, Pradeep, Mansoor, Mahesh, Kantilal. Everyone says that this from especially from January 2022, we have to look into GSTR 2B for claiming ITC, and that's actually the correct answer. Now we are actually clear about do we have to focus on 2A or 2B when it comes to claiming of ITC, and the clear answer over here is that we have to look into GSTR 2B for claiming ITC. Now again, I know you would be having a lot of questions here also. So see, I have not even gone to our main section, which is section 38. I'm just talking about the current scenarios. This is everything which is already there in the act or the rules, which you are already following and which is already applicable to all of you. We are going to go into the section 38 also and understand what extra changes they are going to come up with if all these things which was part of budget gets notified. Before that, let me just ask you another important question, because I keep on getting question, and I think there is one question from Arpit also in respect of the same thing. So let me ask you one simple question. Today what happened, there was one particular invoice, right? I asked my supplier, please deliver some goods to me. And supplier said, okay, I will do that. Let's say this all transaction happened on 28th of Feb, right? Now on 28th Feb, this happened. My supplier has actually raised an invoice also on 28th Feb. And I like, okay. And my supplier also was very compliant. He has also filed his return, which means he has also filed his GST1 on time, which is on 11th, right? So now what happened, if I look into my 2B for the month of Feb, I was able to even see this invoice in my GST 2B for the month of Feb. But I have not received this good on 20th Feb. Rather, I have received this good on 2nd of March. Now, my question to all of you is, while I am filing my GST 3B for the month of Feb, can I go ahead and claim ITC, which is reflected in my GST 2B? I also have a tax invoice, but I have not received the goods in this particular case. Can I go ahead and claim the ITC in the month of Feb while I am filing my GST 3B? Great. So I got like answer from a lot of people. So BK says no, Amit says no, Ajay says no, Naveen says no, Arvindam says no, Amit says yes we can, Yash says no, Rajesh says no. Okay, most of the people says no. I think few people are saying yes. So see, the correct answer over here is another important part. We should obviously understand about conditions for claiming ITC. So conditions for claiming ITC, one of the condition is that you should actually receive the goods or services. In this particular case, you haven't not received the goods and services, which is goods over here. Since you have not received the goods, you cannot claim ITC in such case, right? So which means if you ask me, can I go ahead and claim ITC in the month of Feb? The answer is no, I can't claim ITC because I have not received the goods. Now let me ask you another question. Okay, in Feb, I have not claimed ITC. It's okay. What happened in the next month? Right. So now, let me ask you another question. So when I look into the next month, so next month over here is your March, right? So Fab may I have not claimed ITC, that's okay. But when I looked into my GST 2B for the month of Fab, I was able to see the ITC. Now in the month of March, because I have actually received the goods, can I go ahead and claim the ITC in the month of Feb while I'm filing my GST 3B? So that's the question to you. Can I go ahead and claim ITC? Now, just one thing, I cannot see this.
Yeah, hi, good afternoon. I think Surbhi is joining back, so we'll wait for a minute. I think she has some connectivity issues.
Sorry, it seems like there was some loss of connection from my side. So my question was like, can I go ahead and claim the ITC in the month of March? So I could see like people have already replied also. So Pradeep says yes, and okay, Arpi says yes. The same will not reflect in Feb, but we can always claim in the month of March, which is actually the right answer over here. So in this case, the second example which I gave you, in this particular case, since I have now received the goods and also other conditions I have already fulfilled, right? So all the other conditions was already fulfilled. So in this particular case, I can always go ahead and claim the ITC in the month of March. Though there will be discrepancies between the GST at 2B and my 3B, but that is okay. But now here comes the important part. Why I even asked this question? So which means there can always be a discrepancy between my GST at 2B and 3B. Sometime my 2B may be higher and 3B may be less. Sometime it could be the vice versa case also, right? It is very normal because many times we may say some ITC which is reflecting in my GST at 2B, but if you just look into the your 3B, you have not even claimed ITC. The reason could be it is coming under section 17.5 ka block credit. So if that's the case, again you cannot claim the ITC, right? So you don't have to worry about that. There could be differences, that's okay. But another part which you should understand is you should make sure while you're claiming ITC in your GSTR 3B, you should have a proper documentation trail for it. What that does actually means. We all know that in 3B we just give a single figure. But that's not going to help you unless you know what were the document corresponding to that value which you have claimed in your GSTR 3B. Because if you have that figure, then only tomorrow if department issues a notices or give a communication that tell me why there's a difference between these two, you would be ready and you would say, ki, hey, I know there is a difference, but I know whatever the ITC I have claimed is a valid ITC. I have fulfilled all the conditions. I have a proper documentation with us. So you can always share that with the department, right? So you don't have to even worry about them even issuing the notices or the communication. You can always reply it, and that documents are handy with you. So you don't have to that time think about, oh, there is a difference. Why there was a difference? What was that ITC I have claimed in my 3B? What was the corresponding document? So it's really very difficult to even know at that time, because then you have to do all back calculations and track all this thing. Rather, doing that at the time you're actually filing 3B becomes easy, because that time it's a very fresh and you know that these are the document against which I'm going to claim ITC. So which means due to this all changes, another important practice which you should always do is do the recon between your 2B and the PR, and then only accordingly go ahead and claim the ITC in your GSTR 3B, so that tomorrow this does not lead to mismatches. Even if there are mismatches, you know that these are the document against which I have not claimed ITC. These are the documents which have been kept as pending in this month, and you have to go ahead and claim the ITC in the next month. Another example, right, which is a very common use case. There would always be your supplier who have not filed in this month. Reason could be you are a monthly filer, your suppliers are the quarterly filer. And we all know quarterly filers, even they have the facility called invoice furnishing facility, where they can always upload the B2B document on the monthly basis. Still, many of the supplier, they don't use that facility and they file their GST1 only on the quarterly basis. Right? Why? Because it's an optional facility. So unless you force them to go and upload the document, they're not going to do that. So there also you may see that there are some ITC. As per you, you have done all this thing, but since it is not coming in your GSTR through B, you're not able to claim ITC. And why it is not reflecting in 2B? Because your supply has not uploaded in the IFF. Rather, they have only uploaded in the quarterly GSTR 1. So this are some another cases where you may see discrepancy. So you should know, okay, this document has been kept as pending, and whenever it gets uploaded in your GSTR 2B, you will be able to claim ITC. And you have to remember that yes, now you have to go ahead and claim ITC in respect of such documents. Right. So this is anyhow. This was more of just a. Okay, so this was just more of understanding, like what exactly change have happened when it comes to our filing, which is filing GSTR 3B. And the important change is that you should do the recon between 2B and the PR on the monthly basis, and at the same time should know that what is the value which is going in your GSTR 3B. Anyhow, we already have Farhan with us. He will also give you a small demo of how this can be solved, and this can be automated rather than you doing this every month manually, because manually anyhow it's not even possible to look into each and every document, see where you have claimed ITC, where you have not claimed, carry forward to the next month. So that's not even possible. So we already have Farhan, so he will be giving you the demo. But now let's go with the especially our today's session, which is section number 38. So let's talk about that, which is an important part. So here till now, we just cracked this ITC availment thing. We know, okay, there were some ERP configurations. We have checked the vendor filing status. We have even done the recon between 2A or 2B. We have a best softwares also, right? So all of these things are done. Now what happened it after doing all this, right? I know I have accounted the purchase document. I have received the goods, and my total ITC is 24,50,600. Just think this was the value of the ITC which I have to claim. But then when I did, and what I did, I have done the reconciliation with my GSTR 2B. After I have done the reconciliation with my 2B, I know some of my vendor have not uploaded or filed the document. So I could not see the documents in my GSTR 2B. So there my ITC got reduced to 20,30,800 in this case. So I got, okay, now finally I have to claim this figure. Here also, I know that one of the question being asked by, I could see there was one person who have asked this question. Many times you may see that the ITC is coming and reflecting in your GSTR 2A, but this is not reflecting in your GSTR 2B. And you may always face this problem. Should I go ahead and claim ITC or should I not claim ITC? And why even this is happening? One simple example. You had your supplier. Let's say supplier, again, there was an invoice dated 1st January. When the invoice was dated 1st January, supplier has to upload or file their GST 1 for the month of January. And the timeline for the supplier to file their GST 1, assuming he's a monthly filer, was 11th of the next month, which is 11th of Feb. Now this supplier, he has uploaded this document. There was no problem. But he was not able to file the return, which is GST 1 on 11th, because maybe due to some reason, and he filed his return on 12th of Feb. In this particular case, when you look into your GST 2A for the month of January, you will be able to see this document, right? Because January May you will see, or let's say now you're checking your GST 2A on maybe let's say 12th or 13th or 14th at the time when you are actually preparing your GST 3B, because you have to do all the recon. So let's say and since we know that 2B gets generated only on 14th, so assume that you have downloaded your both 2A and 2B on 14th. So when you look into your GST at 2A, this document will be coming over there because this was part of your January ka return period, right? Since it was part of January return period, you are going to see this in your GST at 2A for the month of Jan. But when you look into your GST at 2B for the month of January, what will happen? You will not be able to see this document. Rather, you will be able to see this document in the month of Feb. So when you download Feb card GST 2B, which will be on let's say 14th of March, in that particular case, you will see this document, but not in the month of January, right? Why this happens? Because 2B, this is always basis the supplier GST 1 filing date, when he has actually filed the return. We always look into that basis that this 2B gets generated. But when it comes to GSTR 2A, this is always dependent on the supplier's GSTR 1 return period. That what was the return period being selected by your supplier, and that's the reason you always see the differences between your 2A and 2B. Now, in this case, another important question was, can I go ahead and claim the ITC basis the document which was uploaded in 2A, which was part of 2A but not part of 2B? Now, from January onwards, we cannot claim the ITC in respect of such document in the month of January. We will be able to claim the ITC only in the next month, which is the Feb month. Right? So this is the answer to the query which was being asked. Now let's assume we have actually fulfilled all the conditions and we say, okay, finally my ITC is 20,30,800 after fulfilling all such conditions. Now let's talk about the section 38 which was introduced in the budget, like what exactly we have to do, right? So again, there was a person who says, okay, now finally I have done, I can avail all the ITC. But then the thing is, this section 38 comes into picture, and what exactly that section 38 talks about? This says that there were some vendors who are newly registered, so you cannot claim the ITC immediately. So that is what section 38 says. This is if there is some newly registered vendor, they will be providing the timeline, like within when you can actually go ahead and claim ITC. There could be 30 days, it could be 60 days, depending on. So we don't know as of now because they have not mentioned in the rules. But what they are saying, the new condition of section 38 would be that you also have to look into your newly registered vendor and they will give you a timeline that within this time you can't claim ITC in respect of the purchases from the newly registered vendor. So that is one another condition of this section 38 which was proposed in the budget. So now what will be the impact on my ITC over here? So if I am purchasing from the newly registered vendor, then my ITC will again get reduced. So earlier it was 20,38,300. So now this will get reduced to 19,35,000, assuming that 1,03,300 was the purchases from the newly registered vendor. So which means one condition of the section 38 is that we have to look into the vendors who are newly registered and government will tell us that within this time limit you cannot claim the ITC. So this was one condition which was proposed in section number 38. Now if we just talk about what is the other condition, if we just talk about, so then there is another condition which has been added, which is default in the payment of taxes by supplier. What does that mean? I think this condition which I was referring to in the start of our session, this was already there somehow. When I'm saying this is already somehow, it is there. Many times what happens that the ITC is reflecting in 2B. Perfectly okay. But this vendor has not even filed their GSTR 3B, which means the vendor, they have filed their GSTR 1, but they have not filed their GSTR 3B. In that case, again, government will restrict you for claiming the ITC. But you know that we had discussed something, right? We said, okay, there would be always an endless process here. We cannot keep on waiting for each other for claiming ITC. I have to file my GSTR 3B and they also have to file their GSTR 3B. So again, government will give you one time period like, okay, within 2 months, if this person has not filed their GSTR 3B, then you have to reverse the ITC. So that is how they're going to do that. So which means the second condition of this section number 38, which is newly introduced, is that your supplier should have filed both GSTR 1 and GSTR 3B. If they have not filed their GSTR 3B, then you have to reverse your ITC. See, the bigger problem which will come up if this particular thing gets notified is like, see, we know that this condition anyhow is there already in the Act. This is already part of our section 16 condition. But the problem comes in, as I told you, this is a kind of loop, which is like, I can't keep on waiting in fact, everyone can't keep on waiting for each other for even filing GSTR 3B. So they may give up some time period, okay, within 1 month or 2 months or a quarter, depending on it's a supplier, especially the supplier is a monthly or a quarterly filer. So depending on that, they may put such condition. But the problem is like, okay, for in the first month itself, I have claimed ITC. Now assume that after 2 months, this person has not filed GSTR 3B within 2 months. Though government have even kept certain condition that you will not be able to file your GSTR 1 for the next return period unless you file your 3B for the previous return period. So there are already certain conditions which are in place. But assume this person was not even filing GSTR 1 also from the next return period onwards. So in such case, problem from my side is that, okay, I have to reverse ITC. Now, do I also have to pay interest on top of that? That is something which is really going to be very difficult if I also have to pay interest on that, right? So if there is no interest, then it's okay. Till 2 months, 3 months, if there is no interest, I just have to reverse it. We can still do somehow. We may, but though it is also a very tedious job, because then I have to filter out, I have to look into all the documents which was against which ITC was claimed. So what we can do in 3B anyhow, we have a now document level information with us, because we are putting that calculation trail with us. I may always see, okay, let's check for all the supply whether they have filed 3B for the particular template or not. If they have filed, okay, this is my confirmed ITC. Rest of the ITC I have to reverse. So this is some change which may happen. So this was another important condition which was kept in our section number 38. Right, so where they are clearly saying if supplier has filed GST 1 but not filed GST 3B, then again you cannot claim the ITC. Other than this is another important condition, and you would have already seen some changes in the dashboard which government have already come up with. So if in the GSTN portal, right, you know that in the GSTN portal there is something called search taxpayer API. I can search a GSTN and they give some information over there. So this information right now is already available on the portal also. What exactly that talks about? They says that again the recipient cannot claim the ITC if the liability of GSTR 1 is greater than the liability which they have paid in GSTR 3B. So this is the next condition which they have come up with. What exactly this means, right? So okay, you are saying ki liability of GSTR 1 is greater than 3B. Many times what happened, let's say supply in GSTR 1, they show that, okay, they have a liability of 1 lakh. But actually in GSTR 3B, they have just paid 80,000, which means there's a difference of course 20% there. Again, you cannot claim ITC in such case. See, if it's a actual problem, then we can understand. But again, another problem which will come up is that there can be a genuine mistake. What does that mean? Many times you would have seen that while I was filing my GSTR 1, I had to show something as, let's say, 1 lakh rupees, but wrongly I added one extra zero. That becomes 10 lakh rupees. I realized my mistake, right? But 3B may, because I realized my mistake, I have paid the correct amount in my GSTR 3B, so liability was correctly discharged. Now, maybe in the next month, I have also amended it. So in this case, when you look into the particular month ka GSTR 1, you will see the liability is higher than the liability which is paid in 3B, but actually that was a wrong liability which was declared in GSTR 1 and not in 3B, which means ideally if I look into it, both were matching, but me as a recipient, when I look into it, I will say there is a discrepancy, which means I can't claim ITC. So this is also going to create another problem from among the people who may say that maybe we also have to check cumulatively. That okay, now is it corrected or everything is coming perfectly okay, then you can always go ahead and claim IT. So this was the another condition of our section 38, which says that you also have to check whether your supplier, while he is discharging the liability in GSTR 3B, is it always equal to or more than, and it should not be less than the liability which is declared in GSTR 1. So this was the another condition which was added in your especially section number 38. So which means if I say, okay, assume that 50,000 again your ITC got lost because of all this thing. So your new ITC becomes 18,40,000. Now there was another important condition which was there, which was added, and this is actually going to create a lot of problem. So you might have seen that there were a lot of people, right? So we know that this, in fact, when this rule 36.4 came into picture, and after that government actually amended the section 16 also. Still today, when you look into many of the suppliers, right, they're like, we don't care about all this. We are not going to follow this. We'll just claim every ITC which is part of my books. I am not going to reconcile with 2A or 2B. Whatever the ITC I am seeing, I am going to claim in my GSTR 3B. And people are actually doing that. But another problem from the recipient angle. If the supplier, they are claiming ITC in GSTR 3B, which is more than GSTR 2B, then you as a recipient will not be able to claim the ITC. So this is like another conditions which is kept in section 38, which is again a very dangerous condition, because there could be a genuine thing also, and I gave you some example of this, right? So maybe for a particular month, since I had received the goods in the next month, for that month it may seems like, right, that I have claimed extra ITC, but actually I have not claimed extra ITC. It was a kind of cumulative difference. There may also be certain thing that there was some ITC related to 2021, and sorry, yeah, so the ITC was for related to 21-22, let's say, and I can always claim ITC till September, right? So I'm claiming it now because I forgot to claim earlier. So there may be differences over here, but actually there was no differences. Cumulatively, there was no differences. So this is the another change which came into picture when we talk about this section number 38, where they clearly says that the ITC in 3B, if it is greater than 2B, then you as a recipient will not be eligible to claim such ITC. So this was like another condition, but wait, this is not the end of the condition. The another important condition over here is that default in tax payments. What does that exactly means? Like default in tax payment. Many times what happens, like there can also be, right? So we also have to check the liability which is paid in percentages of their ITC utilization. Many times people actually do this. So if you have heard about this rule 86p, right? So rule 86p, what exactly they say is that 1% of the payment should be paid in the form of cash to the people, to the vendors to whom this rule 86b is like applicable, right? So there are always conditions for it, that to some of the people this will be applicable, it's not applicable for everyone. So to whom this rule 86b is applicable, they have to make 1% of the payment in the form of cash, and the rest 99% they can always utilize through ITC, right? In that particular case, if they are not making that 1% payment in the form of cash, again you as a recipient will not be able to claim the ITC because of their non-compliance. So this was like another condition which was added in section number 38, which they are clearly talking about, that the ITC, right? So the ITC here, you have to see that like 1% should have been paid in the form of cash. Then other than that, they also talk about like class of prescribed person. So they may say that there could be some special person, special vendor. They may define who would be that vendor against which you cannot claim the ITC within the prescribed timeline. So you will be able to claim ITC only when you see that, okay, that the things are compliant, everything is done. So that is how you are going to claim the ITC. So now, because we just talk about, right, so we just talked about like the different conditions which is mentioned in section 38, right? So there were a lot of conditions you could understood that when it comes to section number 38, they mentioned about like different things. Just one second. Yeah, so they talked about lot of conditions. So in short, if you ask me, right, like what were the conditions of section 38, if we just sum it up, right? So we know that there were condition which is already part of section 16, and that was that you should receive the goods, you should have a valid tax invoice, the supplier should have paid the taxes. Then there was another condition which was recently added in section number 16 itself, which means that the document should be appearing in GSTR 2B. Ultimately, they were saying that the supplier should have filed GSTR 1 and uploaded the document in GSTR 1. Right, so that conditions is already there, that it should not be an ineligible ITC as per section number 17.5. The ITC which you are claiming should be claimed within the prescribed threshold limit. So all of that conditions was already there. Along with that, if we just talk about section 38, they say, wait, this is not enough. You also have to look into your suppliers. And when I'm saying you have to look into the supplier, check if they are newly registered suppliers or not. If they are newly registered supplier, you cannot claim the ITC within this time limit. Or if there is a default which is being made by the tax payment, which means if you just look into that they have not made the payment in that particular, which means in general, if they have not filed GSTR 3B but they have filed GSTR 1, in that case also you can't claim the ITC. Or if we just see that, okay, that the ITC, or the taxes, there is a differences between GSTR 1 and 3B, and the liability paid in 3B is less than the liability paid in liability shown in GSTR 1, then also in such cases you may see the like you have to look into this and you can't claim the ITC. Other change is that the ITC part, like if there is an ITC which is claimed by the vendor in GSTR 3B and it is more than what is actually reflected in 2B, then also you cannot claim the ITC. Other than that, there is an excess ITC utilization, which is 1%, that is Rule 86B, that if they have not made the payment in the form of cash, where they were liable to pay the payment in the form of cash, again, in such cases, you cannot claim the ITC. Then the last one is the notified supplier. They may say that they are supplier against which you cannot claim the ITC. So this was something which they have proposed in this rule number, or sorry, not rule, actually this is in the section itself. So they have proposed in section number 38, which talks about the certain conditions which will be added while we are claiming the ITC. So let me just ask you about till this, like did you understand this part? Like how many of you actually understand about the existing conditions which is there in section number 16, and how many of you are actually following that while you are claiming ITC in your GSTR 3B? So you can just say yes or no in the chat box, that how many of you are actually following the conditions which is mentioned in section number. Great. So I could see Kantila says yes, Fiona says yes, Arindam says yes, Pradeep says yes, Arpi says yes. So everyone is saying yes, like all of them follow. Okay, let me just ask you, how many of you actually understood about the conditions of section 38? So these are the conditions which is mentioned on your screen. So tell me, like how many of you actually understand about the conditions which is mentioned in section number 38, which is proposed in the budget? Okay, I could see Lucky says there are many doubts. Great. And Rajesh says, okay, can you please explain the last two conditions? Great. So I will also explain like last two conditions. So if Rajesh, if I just talk about the excess ITC utilization, right? You know that there is rule number 86B, right? Rule 86B, what exactly this is, that this particular thing is applicable to the taxpayer, like who's like especially who's there are certain exceptions to that, right? So there, what they say is that while you are filing your GSTR 3B, you cannot claim 100% of your ITC, because for such taxpayer, mainly they have enough ITC that they don't have to even discharge the liability at all. They can every time they can utilize the ITC for making the payment of the liability, right? So there the government come up with this rule 86B, and this says ki, hey, wait, you cannot utilize 100% of your ITC. You have to pay 1% of the taxes in the form of cash, right? In such cases, the government says if this rule 86B was applicable to this vendor and they are not paying 1% of the payments, right, the 1% of the liability in the form of cash, then they become non-compliant. And if they become non-compliant, then you as a recipient cannot claim the ITC. Great. So this is about the consent. The last one is like they say there would be some notified supplier. So government may come up with a list of the supplier against which you cannot claim ITC within the particular time limit. So that is what they talk about, right? So this was all about, especially this was more about the section 38 conditions which was proposed in the budget 2022. And okay, I could see that there is another question from Arpit and Sheetal. Rule 86B exceptions are still there or not? Yes, Arpit, that is still there. So there are exceptions, which means if the director is already paying 1 lakh or more of the income tax, then this is not even applicable. So that condition still exists. So when I'm looking into Rule 86B, I have to, because again, Rule 86B is not applicable to every person, right? It is only applicable to some part of the people. So this was about especially the section 38, and I could see there are a lot of questions. We'll keep on taking all the questions, and I will even try to answer that on the chat. Meanwhile, maybe I will request Farhan from my team to actually talk about like how we can automate some of the parts, how we can automate the entire process which we are already following, which is reconciling automatically, making sure the vendors are complying, making sure when we are seeing that okay, this vendor has not filed, there should be an automatically trigger which goes to the vendor so that they uploads the document, and also at the same time tracking that whether we have to claim the ITC in my GSTR 3B or not. And if I have to claim ITC in my GSTR 3B, I should have a calculation trail, which I keep on saying, right? You should know that there is a documentation trail that against this document I have claimed ITC. This other document which has been kept as pending and has been moved to the next month. All of this should be done automatically, because manually this is not even possible. So here I think Farhan will take us through a demo, and Farhan, over to you.
Thank you, Surabhi. Thanks a lot. So, as I mean, to start with, very good afternoon, everyone. So, with respect to that, Surabhi's part, I just wanted to add a value addition with respect to that. How, as a company, as a solution provider, we could be able to add business to it, and what are the things that we could be able to bring into the table that can easily able to, I mean, avoid such kind of an delays, appear such kind of an notifications with respect to the automation. As you know that we are a technology fintech company where we definitely help enterprise businesses and also individuals to automate their entire taxation part with respect to this particular solution. So how are we going to do is that with respect to the solutions what we are providing. So we have understood, I mean, a large set of companies having a problem with respect to their efficiency, with respect to their productivity. On top of that, we also have a company set of companies where we understood that if we could be able to automate these particular parameters, then definitely we could be able to avoid, I mean, lot of inside problems which managers face with respect to their
Seems like we are not able to hear Farhan. So maybe once he will back, he will just rejoin. Meanwhile, I could see there is some queries which is already mentioned. One query I could see from Murari who is asking, are 3B showing credit note but not receive that invoice? What should I do? So Murari, I could not understand. Like, do you mean that that you have seen the credit note in your GST 2B and you have not received the corresponding credit note? So if you can elaborate on the query, I think that will be great. Other query I could see that from Mahesh, which is and sorry Sanjeev, who is saying, how would buyer know whether the supplier has met the conditions or not? So Sanjeev, there will be a lot of reports which will be available, and basis that report we have to look into every document and correspondingly do this. Some of the reports are already present, and I think ClearText is already solving this, so we are already helping in complying all with all such conditions. So there would be a vendor KYC. See, but the important part is like, see, whenever we are onboarding vendor, we should know whether that vendor is compliant or not. Because if that vendor is not compliant and I am not able to claim ITC, it can result into that, let's say 18% is a tax rate on that, then it can result into that 18% loss, which is never good for a company. Think about the companies who are actually living in the profit margin of just 20%, or maybe less than 20%. Assume that I am living the profit margin of just 15%. So for me, even having that 18% loss can result into like that can result into negative thing, negative profit. Right, so it becomes very important that how you are dealing with this, what are your supplier and whether their suppliers are compliant or not. So that is really very important part when it comes to the compliance part. Right, so I think Farhan is also back. So maybe Farhan, you can take it over. So meanwhile, I will keep on answering the queries on the chat box.
Right. Sorry. I had a little bit connectivity issue. So with respect to, is my, I mean, voice is audible, Surbi?
Yeah, Farhan, it's audible.
Yep. So what we are planning, what I was saying is that how difficult is to adhere the taxes with respect to the organization and individual with respect to lot of operational pains are happening. So how we could be able to add values to that, and I mean, it is very difficult for an enterprise business or a normal people to climb all the 100. I mean, to proactively work on the compliances, which now Surbi is also I mean taking a session of how do we decode the section 38, and the other sections are now evolving with respect to 36(4) rule, or with respect to new I mean proposed solution with respect to 20 to 50 crore e-invoicing slab. So with respect to a lot of these parameters, that more than 80% of the enterprises leave money on the table due to insufficient compliances. So this we have seen a lot of customer whose monies are lying and they are not able to claim 100% of those ITCs in terms of either they have claim excess, or it is a shortage claim, or in terms of ITC imports, or in terms of RCM claim. There are a lot of other parameters also. And to compress all these things, how do we give them a solution? So I just wanted to give on a technology front end that how Clear can add values to that. So first of all is that we started as a company, as you know, that as a software company where we could be able to give an assisted services related to that particular part. So a software can help you in terms of automating this, or a software can help you to do this reconciliation or to comply on those parameters. That is one. And now we have evolved with respect to particular part, that how do we integrate with respect to the ERP systems, how do we integrate with respect to the government portals, how do we bring a solution with respect in the phase 2, that these two different providers can be able to join together, give you integrated solutions to the customers and the enterprise businesses. Now the era has now completely changed, that now government regulations changes happening in such a way that it is bound to have a real-time compliance solution that we are now building it upon. It is not only a solution that is integrated, it is not only a solution that can help you in terms of a software. Now a solution can happen on a real-time basis in terms of the real-time your reconciliation, real-time e-invoice generation, real-time your 2A 2B download, real-time your all your compliances has to happen with respect to all the sections which are happening, all the changes which are happening from the government side. To give you a complete picture of that, yes, Clear has a solutions in place. So what is a solution that we could be able to bring to the table? So before that, if we are getting those solutions, what is the companies that can get benefited instead of going with XYZ solution? One is that the enterprise business can get a great ROIs with respect to their ITCs, with respect to their filing, with respect to their time, productivity, everything can be reduced. Second thing is that definitely it will give you a peace of mind that you need not to worry about that tomorrow, if these changes are coming, how do I comply with that particular sections, is my business is going to affect with that particular part. So that fear factor and those parameters you need to take it away, and your the entire business is in the peace of mind that you could be able to easily run your business effectively with respect to these changes. That is secondary. Third is that with respect to each and every organization, that how to have a future proof system. For example, everyone's dream is that okay, I wanted to automate my organization with respect to complete automation, with respect to my compliances, with respect to my invoice generation, with respect to my ERP system, everything has to be automated. So that future proof system is what we are now planning to build it upon. To have that particular in set of mind, so we have two basic parameters of the solution. One is our CCC, which is Clear Compliance Cloud, which has multiple parameters, like we have our GST software, we have our e-invoicing and e-bill software, we have our TDS solution, and also we have our managed services parameters, where we help the entire activity to be outsourced to us, and we will be able to do with respect to our chartered accountants. On top of that, exclusive, we are giving an enterprise solution for the large enterprises with respect to your Max ITC solution and Max Assistant solution. And why these solutions are important, and how this solution can give me an confidence that yes, if I implement this kind of a solution, this will definitely help me in climbing more ITC, or in climbing more compliant towards the government compliances, and my organization impact will be very less. So for that, we have solutions are in place, and this solution, I assure you, that will help you in terms of all this automation. On top of that, we are in sync with in next to 1 or 2 quarters, that we are also building a vendor network and invoice to payment automation, which can help you in terms of your invoice discount and invoice to payment automation, which will also help you not only the finance team with respect to your AP and procurement team to have a complete solution in place with respect to your all the taxation can be automated. And our vision is very simple. So down the line, in 1 year, we have to have a customer network which has a complete a platform to be built on. So I just want to take 5 minutes on this particular slide to conclude on that, okay, why these solutions are important and how it can add values to your business on a very detailed scenario. One is that Clear GST is a software that will help you in terms of your complete GST compliance automation. It has basically 3 major parameters to help you. One is with respect to GST compliances and the GST filings. So GST filings, I mean to say all your GSTR 1 filing to GSTR 9 and 9C filing. completely can be can be able to do the filings with respect to our software. That is one. Second parameters is with respect to various reconciliation. It is not only for your 2A reconciliation with respect to your purchase record or 2B reconciliation with respect to your purchase record. It is more than that. We have our reconciliation segment with respect to your 8A versus purchase history reconciliation for your 9 filing. We have a reconciliation with respect to your PAN level matching, because a lot of invoices that we are saying that invoices are matching with respect to my GST level, but when you go to the PAN level reconciliation, we tend to know that, okay, these are the invoices which is already lying in my particular different GST, and I have not claimed at all. So with respect to the PAN level reconciliation, yes, we do have a solution available in that. On top of that, that e-invoice versus GST are one reconciliation, which is very important, because as each of the organization are facing issues that whatever the invoices are being generated is not being auto-populated 100% with respect to my GSTR1, where I am facing an issue with respect to that part. That is also can be easily able to taken care with respect to that particular reconciliation segment. And on top of that, if I done my reconciliation, is a system is enabled enough to go and communicate these invoices to my customer through a vendor communication, and also I could be able to generate multiple reports. Now that we are talking about the section 38, which has the reports like 1 versus 3B report, 3B versus 2A report, multi-month 2A, multi-month 2B report, all the compliances report. So we have our A based 35 plus reports are available, which will help you in terms of your completely automated solution of a clear GST software. When it comes to the e-invoicing software, yes, e-invoicing is now applicable with respect to 20 to 50 crore, which is now active from April 1, 2022, which is going to be a very huge, customers are going to be, active on those parameters. And Clear has a solution in place. We are giving a solution more than 500 crore company from October 1, 2020 to till date. And we are a proven system that can be integrated with respect to Tally, with respect to any of the other ERPs also, that can be able to help you in terms of e-invoicing generation, not only e-way bill generation, also with respect to all the other cancellation, generation, printing, custom, template configuration, integration, every parameters we are helping in that. And now with respect to TDS also, which is very important with respect to now 26 years recon is important. TDS rationalization is very important with respect to the forms like 24Q, 26Q, 27Q, 27EQ. All the forms can be able to help with respect to our TDS parameters. And now with respect to the max IDC, which is very, very important with respect to your completely autopilot mode of reconciliation. So why I am mentioning this point is that with respect to real-time compliances, yes, MaxID is the solution that can help you in terms of your real-time compliances. It is not only help you to integrate with the ERP with respect to two-way, it will also help you in autopilot mode of reconciliation. Being a CFO, being an organization head, being a company head, that you could be able to easily do your reconciliation on a weekly basis, on a daily basis, on a monthly basis. So it will automatically take the data from your ERP. It will automatically go to the government portal, download your 2A or 2B data. It will automatically do the reconciliation, and you will see the report that these are the invoices are being matched, and this is the amount that is already lying extra with respect to your IDC. So this kind of an automation can be done with respect to your max IDC. On top of that, your vendor payment blocking can also happen with respect to my compliant vendor, medium risk vendor, high risk vendor, so that I can block their payments. I can easily able to hold their GST amount. I can easily able to hold their entire invoice amount with respect to the high risk vendor. So these kind of an payment blocking, vendor communication activities can also be done with respect to our max IDC solution. So this is what the vast subject that we have. On top of that, these are all the product side I have talked, and also on top of that, we have our managed services, which is tech enabled managed services, which will help you in terms of your doing this entire activity by our own. So Clear will take the entire responsibility. You have to just give me the input data, and as a Clear company, we will be able to take these parameters on a positive way, and we will be able to do all your filings and everything as a managed services to you as an outsourcing activity. So this is what an overview about that, how we could be able to add values to your business in terms of your automation, in terms of a software, in terms of a managed services, in terms of your vendor payment management and vendor payment blocking activity, your ERP integration, everything. So please do reach out to us for this kind of an assistance. We will definitely help you in terms of automating all these parameters to you. And thank you so much for this wonderful time in the session, Surbi and the team.
Thank you for that. So I think we have already covered a lot of queries also, and hope you understood about the Clear products too, along with the today's session, which was more on session 38, and how this is actually going to impact the change in claiming the ITC. And I could see there are a few queries which has been asked, so I will just answer that. So one query is from BK who is asking, in case of ISD credit, shall we go with GSTR 6A or 6B? Okay, BK, there is nothing called 6B here. So when it comes to GSTR 6 filing, right? So B as a ISD registration. So if I am in head office, I have taken a registration as an ISD. In that particular case, I have to file my GSTR 6. So whatever the ITC which has been uploaded by my supplier in their GSTR 1 gets reflected in GSTR 6A. So I always have to refer to 6A and accordingly pass on this credit to my branches, right? So who are a regular registration. And there is another question from Mahesh. Mahesh says supplier has two GST number, two states. I booked invoice in one account under GSTN A, but supplier filed it under GSTR B. Can I claim ITC? So Mahesh, if we just talk about under GST, these are considered as a distinct entity, right? So if this is considered as a distinct entity, which means I cannot use like a one GST, even if it is under same pen. So even if it is under same PAN, and still in such cases, when it comes to claiming of the ITC, I can not claim ITC in such case. I have to ask that supplier to correct that document and show under the correct GSTN number. Another question is from BK who is asking, 6A is dynamic unlike the 2B. Yes, that's true that 6A is dynamic. And when it comes to these rules, right, whatever the rules we were referring over here, this is not applicable in case of the ISD credit. So this is one important thing which we should understand, that this all thing was applicable in case of the supply, because ultimately that's our head office and all, right? So it is not even applicable for them. These conditions were applicable only in respect of our suppliers who are like registered, who are actually filing their GSTR 1. So I hope all I have like tried to solve all the queries. So some of the queries I have already answered on the chat box. Still, in case you have any doubt, any query, you can always mail us at support@cleartext.in. That is our mail ID. And we will also like to understand from you like what are the topic which you would like to have a session on, so that we can take that topics and can share our knowledge with all of you. So that will be actually great. So with this, I would like to thanks for joining us, and thank you for even asking. Like I could see there were a lot of things I could understand from people. So they have talked about the practical difficulties they have actually faced while they are running their own business. So thank you very much, and thank you Farhan for taking us through a clear text demo. Thank you very much.